Even before the outbreak of the coronavirus, the U.S. economy was facing a number of big challenges. Steve Liesman is here. He joins us as we try to calculate the impact of all of them combined.
Yeah, and a broad range, though, Becky. While the coronavirus dominates the headlines, it's just, in fact, one of the major challenges the U.S. economy faces that could depress growth in the first half of this year and which markets believe could even bring the Federal Reserve back into play. The coronavirus has prompted downgrades to China's economy, somewhat less to the U.S. economy. Boeing. Remember, we were talking about that last week. That could by itself take a half point off U.S. GDP this quarter and maybe next before a third quarter rebound. Tariffs. The U.S. and the world economies still face substantial tariffs, though some of them came off, but most of them remain. The U.S. manufacturing global economies were already weak before Corona, though there were some signs of stabilization. Just focusing on Corona, several forecasters have said it could reduce China's GDP by up to a half a point, and that could then shave several tenths of a point off the U.S. GDP in the first half. People's Bank of China responding to the potential slowdown with a large liquidity injection. And some U.S. forecasters think the Fed could cut as well. UBS writing in a commentary over the weekend, we continue to see substantive weakening in the economy and believe that that softness will ultimately drive the FOMC to materially reassess. That's the Fed's own language that they're using to change policy, the outlook, and to cut rates 3 times. UBS sees growth of just 0.6% in the United States this quarter and next. Morgan Stanley, on the other hand, is more upbeat. They wrote in their commentary, while the coronavirus development does imply some downside to near-term growth, it should not derail the global recovery, of which it sees nascent signs. The downdraft in global yields and stocks on Friday suggests the bearish view is the one prevailing right now. The Fed funds futures market now trading with a 70% chance of a rate cut in September, and now a greater than 50% probability of a second cut by December. What happens, guys, as you know, the financial markets price this in immediately around the world, and then we wait for the hard data to show it or not.
You remind me of the mechanics of central banking and liquidity. So there's lots of shutdown in China. Starbucks is closed. Right. Nobody's going out. So when their central bank injects liquidity into all of the banks, what is that doing for them? Are the banks unable to get liquidity because
they won't lend with each other?
Okay.
There's 2 pieces to this. One is that they provide greater liquidity, so there's no sort of freeze up in the interbanking market. The other is it provides more basis for additional loans, possibly in China as well. They did this back other times, 2015, 16. They've injected liquidity, and they'll do it repeatedly. The PBOC has not been shy about acting in these sort of cases.